The markets are closed, but the business stories are just heating up. Hello, I'm Raine Musñgi. Catch up with us on Business Brief. U.S. President Donald Trump is announcing the tariff rate on imported semiconductors over the next week, adding there would be some flexibility with some companies in the sector. The president's pledge means that the exclusion of smartphones and computers from his reciprocal tariffs on China likely will be short-lived as Trump looks to reset trade in the semiconductor sector. Trump declined to say whether some products such as smartphones might still end up being exempted. Earlier in the day, Trump announced a national security trade probe into the semiconductor sector. However, Trump's Commerce Secretary Howard Lutnick earlier on Sunday made clear that critical technology products from China would face separate new duties along with semiconductors within the next 2 months.
Remember, those products are going to be part of the semiconductor sectoral tariffs, which are coming. So you're going to see this week there'll be a register in the Federal Registry. There'll be a notice put out. That is different types of work. So we're going to do that. We did that in autos. The president's going to do it for pharmaceuticals, and he's going to do it for semiconductors. So all those products are going to come under semiconductors, and they're going to have a special focus type of tariff to make sure that those products get reshored. We need to have semiconductors. We need to have chips, and we need to have flat panels. We need to have these things made in America. We can't be reliant on Southeast Asia for all of the things that operate for us. So what he's doing is he's saying they're exempt from the reciprocal tariffs, but they're included in the semiconductor tariffs, which are coming in probably a month or two. So
Chinese leader Xi Jinping warned Monday that protectionism leads nowhere and that a trade war would have no winners. That's according to state media, as he was due to kick off a tour of Southeast Asia with a visit to Vietnam. Writing in an article published Monday in Vietnam's major Nam Dan newspaper, Xi urged the two countries to resolutely safeguard the multilateral trading system, stable global industrial and supply chains, and open and cooperative international environment. On Sunday, China's Ministry of Commerce said the United States should completely cancel the wrong practice of reciprocal tariffs and return to the right path of resolving differences through mutual respect and equal dialogue. Xi's first overseas trip of the year will see him visit Vietnam, Malaysia, and Cambodia as Beijing seeks to tighten regional trade ties and offset the impact of huge tariffs unleashed by his U.S. counterpart, Donald Trump.
I think this is one of the most important visits for Malaysia, not only to Malaysia, but to ASEAN and to the rest of the world. Of course, everyone is looking forward to the message of President Xi. Of course, we hope that China will remain an open trading economy. China will remain a trusted partner of the world. China will remain committed to the rule-based system of global trade.
Well, Japan's Nikkei share average trade higher early Monday as iPhone-related shares jumped after the U.S. administration granted exclusions from steep tariffs on smartphones and other electronics imported largely from China. It's a move seen as a big break for technology firms such as Apple and Dell Technologies that rely on imports from Beijing. Bank of Japan Governor Kazuo Ueda said on Monday, global and domestic economic uncertainty has increased sharply due to U.S. tariff policy. South Korean shares rose as well, led by chip and battery makers, with investors' focus remaining on U.S. tariffs. The benchmark Korea Composite Stock Price Index, or KOSPI, was up 1.19%. In Taipei, the benchmark index was up 2% in early trade. Chipmaker TSMC also went up nearly 1% as markets opened. This week, TSMC's earning will be a highlight given U.S. President Trump's plan to investigate the entire semiconductor supply chain. Australia's ASX was up 1.4%. Indian markets are closed for a public holiday. Oil prices, meanwhile, fell on Monday as on concerns the escalating trade between the U.S. and China would weaken global economic growth and dent fuel demand. Both contracts have lost about $10 a barrel since the start of the month as a trade war between the world's two largest economies intensified. Meanwhile, demand for hedging against potential dollar declines has jumped to a 5-year high as the Trump administration's tariff policy threatens to sap U.S. economic exceptionalism and undermine the greenback. According to quotes from several media outlets, including CNBC, Financial Times, and Bloomberg TV over the weekend, the tariff policy introduced by the United States escalates its tensions with trading partners around the world and dampens the prospect for the country's economic growth, with the U.S. dollar index experiencing nearly 10% decline from its recent January high. The United Kingdom has taken emergency control of Chinese-owned British Steel. Parliament rushed through new legislation in a rare session over the weekend in a bid to stop Chinese company Jinping from shutting down the Scunthorpe plant blast surfaces or furnaces. The takeover protects thousands of jobs and secures Britain's industrial future. British Steel operates the UK's last blast furnaces.
It became clear they would not accept any financial offer, and their intention was to close blast furnaces come what may, and they wanted to keep the downstream mills and supply those directly from China. This was Thursday. I can't speak to motivation. I was negotiating in good faith. I believed that we were quite far apart, to be clear. I mean, we made a substantial offer that was comparable to the work we're doing with Tata and Pot.
Meanwhile, tensions flared at the site as Jinping executives were reportedly denied entry to the Scunthorpe plant. Police were called, but no arrests were made. Government now holds sweeping powers to keep the furnaces running, though Jinping retains ownership for now, and political influence is not attached to the company's shutdown decision.
I'm not accusing the Chinese state of being directly behind this. I actually think they will understand why we could not accept the proposition that was put to us in terms of losing that essential national capacity. So I'm not alleging some sort of foreign influence.
U.S. President Donald Trump has pushed harder against Nippon Steel's $14 billion bid for U.S. Steel. Shares of the 124-year-old American company tumbled 7% last Thursday when Trump repeated his opposition to U.S. Steel going to Japan.
I think that the United States Steel, one of the great companies of the world, U.S. Steel, should remain in our country.
Talking to reporters aboard Air Force One on his way back to Washington, D.C., Trump also announced plans for new tariff policies within the week for electronic components.
But the tariffs will be in place in the not-distant future because, as you know, like we did with steel, like we did with automobiles, like we did with aluminum, which are now fully on, we'll be doing that with semiconductors, with chips, and numerous other things. And that'll take place in the very near future.
39 out of 166 members of the World Trade Organization, including the Philippines, affirmed their commitment to a rules-based, transparent, and inclusive global trading system. This amid rising protectionism and unfair practices. The member economies issued the statement as they commemorated the 30th anniversary of the WTO, the only international organization that deals with trade rules among nations. The members also committed to explore innovative approaches that will enable the WTO to deliver meaningful outcomes and restore a well-functioning dispute settlement system. And in Japan, the much-anticipated World Expo 2025 gets underway. The event is showcasing cutting-edge innovations in technology, sustainability, and international collaboration. With the theme Designing Future Society for Our Lives, it aims to bring together over 160 nations to address pressing global challenges and co-create a better future for all. World Expo 2025 is being held in Osaka and will run until October. To pause for a few reminders, but the biggest business stories from around the country. will be next. Keep it here on Business Brief, only on the Bilyonaryo News Channel. Welcome back to Business Brief. A massive sell-off in U.S. stocks and treasuries is rippling across global markets with signs that the Philippines is beginning to feel the impact. Our correspondent Sujin Kim joins us on the line for details. Sujin, go ahead.
Yes, Raine, the sharp hike in U.S. Treasury yields driven by heightened political uncertainty and trade war fears has triggered a shift in investor strategies worldwide. In the local market, long-term government securities are already seeing higher rates, with the Bureau of Treasury's latest 10-year auction yielding as much as 6.4%, up nearly 40 basis points in just a few days. While short-term rates are easing amid BSP rate cuts, long-end yields remain elevated due to global risk premiums. Security Bank's chief economist Dino Aquino says credit spreads between Philippine and U.S. bonds widened early last week, underscoring the local market sensitivity to movements in the U.S. Treasury space. BDO Capital President Ed Francisco adds institutional investors are now pulling back from equities and shifting into safer assets, including money market funds, short-term securities, and AAA-rated corporate bonds, offering 6 to 6.5% returns. With the peso gaining strength against the dollar, analysts say denominated investments, particularly dividend-paying stocks, and long-dated bonds are becoming increasingly attractive. Francisco says some Philippine corporates are now rethinking their fundraising plans, with several IPOs and bond issuances potentially facing delays due to foreign demand uncertainty. And those are the latest updates for now. Back to you, Raine.
Thank you so much for that report, Sujin Kim. The DOTR is eyeing more partnerships with the private sector to add more intermodal terminals. Paolo Barcelon joins us live from the PITX in Parañaque for the latest. Paolo, go ahead.
Hi, Raine. Transport Secretary Vince Dizon says more interconnected transport terminals should be built to address passenger demands not just for the Holy Week season, but for everyday commutes. Dizon noted that terminals should have intermodal connectivity to encourage better transfers between modes of transport, such as from buses to jeeps and even the LRT. This as he cited successful public-private partnerships to build the PITX, which is operated by the government and Megawide Construction Corporation.
Kaya nga, pinautos ko na meron tayong North Terminal Exchange. Sa Norte naman. Ito sa South, dapat meron din tayo sa North. No, merong ginagawa ngayon na para for PPP sa Valenzuela. So pinapamadali ko na yon.
On the other hand, Raine, Dizon also inspected other terminals around the Pasay area and found them to be unsatisfactory. Aside from uncomfortable seats and unclean toilets, Dizon says the terminals operated illegally. After the Holy Week, Dizon says he will coordinate with the LTFRB to give sanctions to 4 bus companies. Now, Raine, over 1,000 buses are now given special permits to allow them to ferry more passengers to different provinces for the Holy Week exodus. Transport regulators are already deployed here at the PITX to ensure that permits are quickly issued and buses can move faster. Since the weekend, trips to Bicol and the Caraga region in this terminal are already fully booked due to the rush of online reservations, and walk-in or chance passengers will only be allowed at bus companies' discretion. Earlier, Dizon also inspected the Manila North Port and found that an unnamed shipping line had been overselling tickets. Dizon said they will make the company accountable for its actions, saying that these may lead to overloading and potential disasters at sea. The Philippine Ports Authority, the Philippine Coast Guard, and Marina earlier said that they are strictly monitoring passenger loads at seaports. Now, Raine, back here at the PITX, as of 2 p.m., over 80,000 passengers have already arrived, and additional EDSA carousel buses will also be deployed for commuters who will travel here in the metro on Monday, Thursday, Good Friday, and Black Saturday. Raine?
Grateful for that live report from Parañaque, our Paolo Barcelon. President Bongbong Marcos is calling on Filipinos to draw strength and hope in the story of Christ this Holy Week. In his message, the president urged the nation to embrace resilience, compassion, and faith, values exemplified in Jesus' suffering, death, and resurrection. He encouraged the public to reflect on Christ's sacrifice and to let life's trials strengthen their character and compassion for others. The president also hoped that the Holy Week would be a time for families to reconnect and find comfort in one another's presence. Thousands of police personnel have been deployed throughout Metro Manila in time for Holy Week. National Capital Region Police Office, or NCRPO, says security has been tightened in transportation hubs, commercial centers, malls, parks, and recreational spots. Police personnel have been deployed to over 300 churches in the metro, with others manning major roads, checkpoints, and transport terminals. The police have also increased their presence in malls, with officers on standby for possible emergencies. Good news for motorists traveling this Holy Week. Expect a huge rollback in oil prices soon. Gasoline could go down by as much as 3 pesos and 75 centavos per liter starting Tuesday, April 15. Diesel prices could decrease by up to 3 pesos and 40 centavos per liter, while kerosene 3 pesos and 50 centavos per liter. The Energy Department says factors for the rollback include escalating U.S.-China trade tensions, which have led to fears of recession and reduced demand for crude oil. Overseas Filipino workers can now cast their votes ahead of the upcoming midterm polls next month. The OFWs can vote until May 12 at 7 p.m. in line with the voting schedule in the Philippines. Pinoys in New Zealand were the first to vote. COMELEC confirmed that the system underwent a verification process, successfully recording and counting all test ballots accurately. The internet voting system is in place, with COMELEC officials, technical experts, and representatives from the PPCRV supervising the process. Country's debt service inches down by 52.15 billion pesos in February. Data from the Bureau of Treasury shows this is more than 80% lower than the 293.6 billion in the same month last year. The first 2 months of 2025, the government's debt service also decreased by more than 60% to 158.7 billion pesos from 452.5 billion pesos in the same period of 2024. Debt service refers to payments made by the government on its domestic and foreign debt. The Treasury Bureau explains this is due to the decline of amortization payments to 3.7 billion pesos in February from 245.8 billion pesos in the same month of last year. On to corporate news now. Jollibee is watching the U.S. closely, preparing for indirect impacts of Donald Trump's proposed 60% tariffs on China. The Filipino fast food giant expects higher costs for suppliers could squeeze margins across its global supply chain. Jollibee runs over 500 stores in North America. Metro Pacific Chair Manny Pangilinan is charging ahead with nuclear power. That's as power distributor Meralco has partnered with state-controlled French multinational electric utility company Électricité de France, or EDF, for nuclear energy deployment in the country to explore small modular reactor projects in the Philippines. The deal with one of the world's biggest nuclear energy firms marks a new phase in the country's pivot to alternative energy, with Pangilinan calling it the future of power. Finally, 7-Eleven Philippines logged a 9.4% profit jump in 2024, hitting 3.8 billion pesos. The parent firm, Philippine 7, is also ramping up expansion, planning 500 new stores this year, mostly in the Visayas and Mindanao. The convenience store operator is backing up the expansion by up to 6 billion pesos in capex. On to the markets now. Philippine shares gain for a 5th day in a row, starting a shortened trading week in the green. The main index closed Monday at 61.45, in step with a rally among Asian peers. Value turnover reached 4.3 billion pesos. Advancers edged out decliners 106 to 83. The services sector charged ahead 2.25% higher, with Razon-led port operator ICTSI surging over 4%. Properties also ticked up about 1.75%, with the yellow land up 4.6%. Meanwhile, at the foreign exchange market, the peso is currently trading at 57 pesos and 2 centavos to the US dollar, weaker than Friday's close of 56.97. And that's a wrap for today's Business Brief. I'm Raine Musñgi. Join us again tomorrow as we bring you the stories that help you plan your next big, bold moves in business, only here on the Bilyonaryo News Channel. Always on top.
This year's Manila International Auto Show, or MIA, celebrated a major milestone, turning the big 2-0. For 2 decades now, it's been the ultimate playground for car lovers, showcasing not just shiny displays, but also major local debuts of the hottest car models.
Over the years, MIA has witnessed the unveiling of groundbreaking models and rise of the electric and the hybrid technologies, and the growth of the passions community.
And this year, it was all about the future. New energy vehicles took center stage, proof that the shift to sustainable mobility is speeding up. One of the biggest players on the floor was AC Mobility, powered by the Zobel de Ayala family. Their booths proudly showcased BYD and Kia vehicles, but it wasn't just about the cars. It was about the bigger picture of building the charging infrastructure to match.
With every new charge point installed, with every EV on the road, and every innovation in charging technology brings us closer to a cleaner, a smarter, and more efficient way of moving.
Over at the Automotive Group, car connoisseur Willie Titan rolled out luxury head-turners from Mini, Lotus, and Chinese EV brand Zeekr. His goal is to rev up excitement and sales in a highly competitive market.
You need to concentrate on the unique selling propositions of each and every car. Some of them are based on pricing, some of them are based on specs, some of them are based on how it looks.
But it wasn't just the new kids on the block making noise. MIA's also gave the spotlight to classic cars, custom builds, and the booming aftermarket scene. One standout was Concept One Wheels, eyeing the luxury market with their premium hoops.
We're targeting the European cars as well as high-end Japanese like Lexus. And so maganda yung product line niya for mga sedans, saka crossovers, and even sports cars like the Lotus.
From eco-conscious innovations to pure car eye candy, MIA's 2025 proved once again that when it comes to the road ahead, Filipino car culture is definitely in the driver's seat. For BNC Mobility, G. Baroga.